Let's start with the carnage report. So, April 2024, Sidra is trading at just a fraction of a cent, around 0.000531, with forecasts screaming about 224% gains by May. Expert predictions are like flooding social media, promising $100 by 2025. And, Meta AI algorithms are supposedly calculating these wild $1,000 trajectories by December 2024. Fast forward to February 2025, and the battlefield, well, it looks like a crypto graveyard. Those $1,000 dreams evaporated. The $100 promises vaporized. Millions of believers watched their moonshot fantasies transform into, financial nightmares. But here's where most analysts get it completely wrong. They're treating this destruction as Sidra's funeral, when it's actually the birth of its most profitable phase. The same pattern that created Bitcoin millionaires during the 2018 to 2020 bear market is repeating itself with, honestly, surgical precision. While retail investors panic sell their positions, blockchain forensics reveal something extraordinary happening in the shadows. Whale wallets aren't dumping. They're accumulating aggressively. Address analytics show institutional-grade wallets increasing their Sidra holdings by, get this, 340% since November 2024. These aren't random purchases from desperate gamblers. These are calculated moves from entities with eight-figure crypto portfolios who honestly understand market cycles better than your average Twitter influencer. The accumulation pattern here, well, it perfectly matches Bitcoin's institutional buying during its darkest 2019 period right before the legendary bull run that created an entire generation of millionaires. Four specific catalysts are converging to create what I'm calling the Sidra resurrection event. So, Catalyst 1 is a regulatory clarity breakthrough. Global financial regulators are, finalizing crypto frameworks, and Sidra's compliance positioning actually places it ahead of 90% of competing tokens when those institutional floodgates finally open. Catalyst 2 is the completion of technological infrastructure. Sidrabank's ecosystem development, hit some critical milestones back in January 2025, which now enables real-world utility that, honestly, transforms speculative trading into genuine economic demand. Catalyst 3 is all about market cycle timing. Crypto markets, well, they tend to operate in these pretty predictable 4-year cycles, and right now we're entering that key accumulation to expansion transition phase where, if you're properly positioned, assets can just explode exponentially. Catalyst 4. Institutional adoption acceleration. Major financial institutions are quietly testing Sidra's infrastructure for cross-border payments and digital asset management, creating demand pressure that's pretty much invisible to retail markets. Let's talk numbers without the hopium. Current market conditions have created what mathematical models call maximum pessimism valuation. That's the point where asset prices reflect worst-case scenarios instead of their fundamental value. Sidra's network fundamentals show user growth increasing 67% quarter-over-quarter, even with all the price devastation. Transaction volumes are climbing while the token price crashes, and that's creating the classic value disconnect that usually comes right before massive corrections. Historical precedent suggests tokens experiencing this specific pattern deliver 10 to 50 times returns during market reversal. These aren't overnight fantasies. These are calculated projections based on adoption metrics, utility expansion, and institutional demand curves. If this reality-based analysis is opening your eyes to opportunities others miss completely, smash that subscribe button and join our community of strategic crypto investors who profit while others panic. Here's your strategic playbook for capitalizing on this chaos. Current market despair has created the most favorable risk-reward ratio Sidra has offered since inception. Dollar cost averaging during maximum pessimism phases historically produces superior returns compared to buying during euphoria cycles. Smart money accumulates when everyone else capitulates. Position sizing remains crucial. Never risk capital you can't afford to lose completely, but don't let fear prevent participation in potentially transformative opportunities. The key is strategic patience combined with mathematical position management. Based on historical cycle analysis and current catalyst convergence, Sidra's recovery window appears to be 6 to 18 months. Not the overnight miracles promised by failed predictions, but sustainable growth driven by actual utility and institutional adoption. The next major milestone comes in the third quarter of 2025, when regulatory frameworks finalize and institutional access expands dramatically. Thank you for trusting TJ Crypto World with your most important investment decisions. While other channels chase viral predictions, we focus on protecting and growing your wealth through market cycles. Before you leave, Check out my exclusive analysis of 3 altcoins positioned for massive gains during the next market expansion. These aren't meme coins or social media darlings, they're fundamental powerhouses with institutional backing and real-world utility. The link is in the description below. Remember, crypto fortunes are built during despair and realized during euphoria. While others panic, strategic investors position themselves for the inevitable recovery. If this honest breakdown helped you see opportunity where others see disaster, destroy that like button, subscribe for weekly market intelligence, and I'll see you in the next video where we're revealing the altcoin that could outperform Sidra's comeback story.